How we doing? Today is Saturday, March the 2nd, 2024. Just doing a quick video here. Just going to record this in regards to the opportunity that is in the real estate note industry right now. And it's going to be here for some time. I'm going to show you a few articles from the Fannie Mae website that kind of back up what I'm saying here. So if you're somebody that's watching this for the first time and don't understand what a note is, it is basically becoming the bank on a property where you step in as if a bank would and you start to receive monthly payments. The note is basically the IOU. It spells out how you repay the loan that you got from the bank, or the loan that the bank gave you. It'll tell you how many months you have to pay it for, what's the amount, when it has to be paid, what's the interest rate. And a note goes along with a security agreement. Most times it is a mortgage, but in different parts of the country, the security agreement goes by a different name. It could go by a land contract, contract for deed, and different names, just depending on where it's at in the country. So you have a note and you have a security agreement. The security agreement is basically will spell out what happens if you don't fulfill the IOU or the note. So that's basically collateralizing the property to that note. So if you don't pay, you're saying that you have the right, this entity, this bank, this individual, this company has the right to then come and take this property from me because I'm not living up to my obligation. So that's just a quick um, you know that's just a quick explanation of real estate notes. And the real reason why I wanted to bring on is to kind of talk about the opportunity that's here now and the one that is coming. So let me share my screen here. So I'm going to take you to this first article from the Fannie Mae website. So this is not, something that I'm making up or, that's not actually happened. But it says here, Fannie Mae announces winner of 22nd Community Impact Pool of Non-Performing Notes. Now, the 22nd, it means that, this has gone on for some time. This is, obviously not the first or second one. So they've had a number of these sales. And what they're doing is selling non-performing loans that are on the books at Fannie Mae, meaning that someone is living in a property and for whatever reason is unable to pay and has gotten behind at least 90 days. So what they do is, instead of Fannie Mae going and foreclosing on these properties and having to manage them and then unload them, what they do is they package up the note and then they sell it to the secondary market. And you'll see here, we'll talk about who purchased this one, but the secondary market is usually a hedge fund, private equity company, some larger type of entity that has, 50, $100 million, something like that, at their disposal where they can purchase these. So as you can see here, it said announced the winning bidder for the 22nd community impact pool of non-performing loans. The loan is expected to close January 22nd, 2024. So this happened, last month, just over a month ago. It has 61 loans totaling $18.4 million in unpaid balance. Now, this one was focused in the New York area. So when it comes to New York, a lot of people, when it comes to note investing and in certain parts of the country, especially New York, New Jersey, and different places like that, more of the judicial foreclosure states, a lot of people try to stay away from notes and stay away from properties like this in those areas because of the foreclosure process. But a lot of times what Fannie Mae has done is they've started the foreclosure process. So we just want to find out where they are in that process, because again, these are non-performing, meaning that someone has stopped paying. And for how long, obviously we don't know just from this announcement, but the average days that the homes are in foreclosure right now are about 1,000 days, a little over 1,000 days. So it's probably, safe to assume that these have been in some type of foreclosure for an extended period of time. And Fannie Mae, a lot of times, has started that foreclosure. So um, you just want to know, where is it at? Is it 25% complete? Is it 50% complete? Are we 75, 80% complete and we're close to, foreclosing and getting this property back? That would be probably the number one thing that you want to know if you are going to, purchase any of these notes. But again, what happens is it goes into the secondary market with a hedge fund, private equity company. They purchase these directly from Fannie Mae because they have, 18.4 million dollars at their, oh, excuse me, they have the amount of money to pay for these. It doesn't say what the winning bid was from this 82% unpaid balance. So they basically got it at about 30% of the BPO value. So if you take all these loans and you look at the BPO value of each of them, they paid about 30 cents. And that is a great discount. That is why you would want to buy a non-performing loan, because if you buy it at 30 cents on the dollar, you have a lot of room to be able to make money, obviously, at 30 cents on the dollar. If you wanted to, depending on your exit strategy, whatever it is that you want to do, you have enough room there that multiple exit strategies could work out for you. And that's really what you want to do when it comes to a non-performing notes, is have 2 or 3 different exit strategies that you can execute depending on what happens once you take, over this non-performing loan. So we're not going to talk about all of the exit strategies right now, but just to, tell you what's out there. And, this type of inventory is going to come to the market because this company, 510 Residential Loan Acquisition, which goes by also 400 Capital, purchased these. And out of these 61 loans that they purchased, they're probably not going to want to keep all 61 loans. It's possible that they could, but they probably won't. And so what they'll do sometimes is, out of the 61 loans that they purchase, they may take, 10% in this instance, because this is a lower amount, maybe 6 to 10 properties. And what they'll do is they'll offer that to, smaller investors to buy. Somebody can buy all 6 or 10, or you can buy one at a time. But the overall point is this, is that these are loans that are starting to come into the space when it comes to non-performing. So I just wanted to kind of go over that particular article there. That's one article. Here's the second article. Fannie Mae announced the sale of reperforming loans. So reperforming loans are when they were in the non-performing status, and Fannie Mae got them and got the homeowner to get back on track on paying. Now, we don't know how long this person, after they've been modified or gotten back on track of paying, it could be either through a modification or not. We don't know if it's been 2 months that they've been paying, if it's been 12 months. That's something that we'd have to, kind of find out once these loans get to, an individual investor level. We'd have to do some research and see, because a lot of times Fannie Mae will modify a loan, and if the person makes one payment, they consider it reperforming. The person that's buying that loan may look at that a little bit different. Maybe it's not quite reperforming in their mind because it's only made 1 or 2 payments. But there may be some in this pool here that somebody's been on track for 6 months, 9 months, 12 months. It's going to be on an individual basis. So this is about 4,800 loans, just over 4,800 loans, totaling $859 million of unpaid principal. So again, this is where people have gotten back on track, so to speak, and are starting to make the payments. And this is what a reperforming loan is. Again, what's going to happen is that the company that bought this, who purchased this? I don't see who purchased this. Announced a sale of reperforming. Sales being more collaboration with. It doesn't say who actually bought this one, but the particular company that, has the winning bid for this, they're probably not going to want to keep all 4,874 loans. there's going to be some loans in there, specifically in a lower priced areas, under $150,000 of market value or property value. Usually, some of these companies that have the type of money that they have don't necessarily want to deal with the lower priced band assets. And so what they'll do is that they'll pull maybe 10 or 15% of this pool here, which is roughly, let's say it's 400 loans. And then what they'll try to do is sell it off into um, to individual investors, smaller investors that could, potentially buy, 5, 10, 20 loans at a time, or they'll try to sell them individually as well. So, out of these 4,800 loans, you could get somewhere around 500, 600 loans that eventually are going to get down to an individual level. And these are reperforming. So they had an issue, they got themselves back on track, and then now that they're paying. So again, this is just to point out these bids. Okay, these bids were due February the 6th. So somebody bidded on it, and they'll probably be announcing the winner of these shortly, within probably the next 30 to 60 days. We'll be seeing who actually won this. So this happened. This information came out on January 11th, and bids were due about a month ago. So we may see, who won the bid soon. So here's another article, another loan sale of non-performing notes. This one had about 1,689 notes, so just under 1,700 notes, totaling $247.3 million. Again, these were purchased at probably somewhere around that 30, 35 cents on the dollar. So even if, and like I was saying, if they carve out some of these of this 1,600, let's say there's 175 or 200 loans out of here that they pull together. If they've only paid an average of 35 cents on the dollar for it, or 30 cents on the dollar, could they not sell that to an investor such as yourself or someone that a small group that you put together? Could they not sell that to you for 50 cents on the dollar and still make a good return? Absolutely. And then there's still enough for that individual to be able to make this profitable for themselves. Could they take the property back after, spending 50 cents on the dollar for the property? Maybe there's some foreclosure costs and stuff like that. Again, with this, we'd have to see exactly where Fannie Mae was in the foreclosure process, but it is probably somewhere down the line. You're probably not starting from square one. So you'll just take over where they left off at and continue that foreclosure. And, that may help you with the actual cost of foreclosure because you're not starting from the beginning. So you'd have to factor in what it's going to cost you to, foreclose on these properties. But again, if you're at 50, 55 cents on the dollar, is there enough room there that you can still make money? And I would say yes, because you're getting it at a steep discount. Are you getting properties on the market these days that are, rental properties at 55 or 50 cents on the dollar? I don't think so. Not at this point right now. That may be coming in the near future, but for right now, you're probably not seeing those types of discounts. And then this loan sale was that the properties are again in the New York, New Jersey area. So they've probably had these on their books for some time, and it's been 2, 3, 4+ years that somebody's been living in this property without making a payment. So now, whatever notes that you can get your hands on, you can talk to these people individually. A lot of times, they get these big government sponsored entities. They can't keep, they don't really keep track of all the loans because they have hundreds of thousands of loans. So, they may not be keeping up and calling and reaching out to people like they should. People, kind of go into hiding sometimes when this happens as well. So they're not going to communicate. But you as an individual, we can, get a real person on the phone, talk to them, say, hey, knowing that you got this at X amount of dollars, you can, do a modification. You can, maybe reduce their principal, put things on the back of the loan, stretch out the loan. There's a lot of different things that you can do for this particular homeowner so that they can stay in the property and you're not just going to take it from them. I mean, obviously, if someone, isn't responsive to you and doesn't want to try to, fix this issue, You have to, obviously take the property back. But in many cases, if they can get someone on the phone, somebody to talk to them, somebody to work with them, and because it's been 2, 3, 4 years, maybe their situation, 2 years ago or 3 years ago is not the same that it is now. And they just need someone to kind of reach out to them, get back to them and tell them what can be done. Well, what can you afford? And if that payment makes sense and, you can make a solid return on this, you can then modify the loan or do, some other strategies with this, just depending on the situation. But these are concentrated in the New York, New Jersey area as well. In this last article here, there's another loan sale, another one of the reperforming. Um, so I think this goes back to that other article that I talked about, and then actually this loan is expected to close in March. So like I said, and then within 30 days or something like that. So around March 26th, this one that went up for sale before that we talked about is going to close on March 26th. Again, another 2,700 loans, and these are reperforming. So my whole point of jumping on here and talking about this is to show you that there's going to be more inventory coming to market throughout 2024 going into 2025. Now, there's already a good amount of things that are out there that you can purchase, whether it be probably not as much non-performing right now. As you can see, more is going to be coming. But you definitely have the performing loans that you can purchase in a lot of times these lower price band assets. As you can see here, the average loan size on this was 183,000. So that's kind of close to um, the lower end of the spectrum when it comes to home prices. They probably got some home. If that's the average, then you probably got a lot of homes that are, under that amount, maybe around $100,000, $125,000, because obviously you're going to have, homes that are $300,000, $400,000, especially, in the New York, New Jersey area, that we talked about earlier. I don't know where this one is necessarily, where these properties, I don't think it says like where they're concentrated at. So this is probably more of things all across the country. And at 183,000, they're probably going to be in some of these more affordable markets. And that's something that I've been talking about as well. I mean, if you can you get your hands on a note in an affordable area, and this person can't pay you and you have to get the property back, if the average loan size is only $190,000, you're probably going to have a really high chance of finding someone that can uh, that you can create a new note for, that you could rent the property to. You could do some type of lease option, depending on where it is. You might be able to do an Airbnb or something like that, long-term rental. All of these other strategies within real estate because you're in an affordable area. So that's very key as well. So, that's really why I wanted to jump on. I mean, it's right here. More of these sales are going to happen. Even with this right now, the way that we're seeing this and these sales that have gone on, I think as of last month, there's still about 1.9 million people that are in some form of foreclosure. So there's a lot of, pent up inventory that is going to come out. We are in election time right now, so, all of that stuff can't come out all at once, but it is going to start to, make its way down to a smaller investor level throughout 2024 and going into 2025. So it's a great time to, um, understand real estate notes. The opportunities, as you can see, are there and more are coming. So you want to understand how to create a note, if you want to use that as one of your exit strategies. And you want to understand how to buy and sell notes, because let's say you do get this reperforming note at a good amount. You have the opportunity, you could potentially sell that to somebody that you know. You can put it out there, after a certain amount of time that you keep it. If you need to recapitalize, you can put it out there to someone else and get all your money back, plus the payments that you've started to receive on this reperforming. From the non-performing side, I mean, you could take it down right now, and then if you want to offer it to the open market, at a certain discount. Maybe you're able to get this at 40 cents, 45 cents on the dollar, and you can say, you know what? Maybe I'll just go ahead and sell this to a local investor, because these a lot of times are scattered throughout the country. So just depending on where you are, it may not be something in your backyard. It may be in another state, and you say, hey, okay, maybe I'll just sell it to somebody local there. And because I only purchased it at 40, 45 cents on the dollar, I could sell it for 50, 55 cents on the dollar, make all my money back plus, you know, something extra on it, and it'd be a solid return in a short amount of time. So there's a lot of things that you can do, a lot of different exit strategies, and now is the time to understand, buying and selling of notes as well as creating them. So that's really what I wanted to talk about. You can, go to those articles there on the Fannie Mae website, and I'll try to, continue to, bring articles like that and show you where this inventory is coming from and what's going on in the market. We go live on Instagram as well as here on Zoom on Tuesday nights at about 8:15. We'll take some questions. We'll break down real estate note investing. Like I talked earlier when we started this, told you what a note is, what the security agreement is. So we just try to take little bite-sized pieces of real estate notes and break it down for everybody. If you want more information too, you can go to the Abundant Capital Group YouTube channel. There's a bunch of videos there. You'll see that there's a real estate note training series. I think it's about 7 or 8 videos. They're about 30 to 40 minutes long, and it kind of goes from A to Z on on the opportunity, what a note is, and where where the inventory comes from, how you buy, how you sell, things of that nature. So all that stuff can be found there. So if you want, you can subscribe to that channel. I try to put out content at least twice a week when we go live, and just trying to help people understand this side of real estate. You want to take a look at it, just where prices are right now on rental real estate. Those margins are shrinking. Rents seem to be kind of stabilizing and coming down, but prices are still elevated. You still have a lot of um, expenses that are going up, gas and electric, insurance. A lot of the expenses for landlords are continuing to go up. So that's kind of eating into, rental profits. So if you are somebody that's a rental investor, maybe you want to look at, turning a rental property that you have into a note, becoming the bank on it, being able to increase your cash flow and have less responsibility for the property. That's something that you may want to do. And that's, understanding how to create the note properly, writing the note properly, how to do all the documentation. And that's what, we try to help people do in those instances. So, or if you just have some cash, maybe you've been in the stock market, made some gains, maybe you've done well with the Bitcoin. I know Bitcoin has been surging, so maybe you made some profit there, and you may want to take some of that profit and look into real estate. Um, Real estate notes is a good place to kind of look and look at the returns that you can get with real estate notes. And again, it's secured by the property. So if anything, worst case scenario goes wrong, you can always get the property back. And having as many assets, especially in real estate, is really good right now. And moving forward, you're going to want to, have more assets, more hard assets. Going into the time that we're kind of going into right now. So you can always get that property back and do a number of things with it. So hopefully that was good information. And like I said, if you watch the replay, you can comment. Hopefully you can share it with people, like the video. And if you have any questions, please reach out. My contact number again is 973-475-8488, or my email is investorgmr@yahoo.com. All right, have a good day and enjoy the rest of your weekend.